Happy Friday, traders. This is Fawad Razak, dollar market analyst for City Index. Today is the 14th of March. So it's risk on today. And for that reason, we've seen the commodity dollars, the euro, all staging a recovery, causing the dollar index to weaken once again. Dollar index is consolidating after a sharp drop last week. It is consolidating inside what looks to be a bear flag pattern. If the support trend of this bear flag pattern breaks, and we go below the 103.40 support level, this blue line here, then that could potentially pave the way for a run down to 103, possibly 102 in the days ahead. Next week, we have lots of central bank meetings, including the Fed on Wednesday, and we'll hear from the Bank of Japan and Bank of England, either side of the FOMC meeting. None of these central banks are expected to change interest rates, but any indications about future policy changes could significantly impact their currencies and potentially the dollar index as well. The Aussie dollar is an interesting currency pair to watch because we have seen some signs of a bottom. The currency pair formed a low over here, and since then it has created a couple of higher lows and higher highs. It now needs to break above the shaded region between 63 to 63.35-ish, where we have seen a struggle in the past, and that's where we have the 21-day exponential moving average coming into play as well. A potential break above that area could lead to a fresh high for this year above the February's high of 64.08, and then we could potentially see a run towards 65 if the trend continues, where the 200-day moving average and psychologically important level will come into play. Gold has hit a new record high above 3,000 for the first time ever. Keep an eye on it because prices are looking a little bit overbought in the short-term outlook, and 3,000 was a key target for many traders. I wouldn't be surprised to see some profit taking around that level. So if you do dip back down, then support at around 2,940 area to 2,950 is going to be important to watch, where we could see another bounce from. Below that, there's nothing significant until the 2,900 level, which is now the next key support area to watch. So the path of least resistance is clearly to the upside for gold, but do watch out for a potential pullback from these overbought levels, especially with the risk assets staging a rally today. Now, the Nasdaq has tried to break below the 61.8% Fibonacci retracement level against its rally from the August low to the February high. For the last several days, it hasn't been able to move decisively below that, potentially a sign that the market is stabilizing at around these levels, and a tech-fueled rally could potentially lift markets once again. So watch out for a possible reversal here. If we move back above this broken trend line that had been in place since January of 2023, that to me would be a bullish sign. So resistance comes in at 19,735. This is the low from this candle here, last Friday's candle really, that was taken out earlier this week on Monday when markets plunged. So if we move above that level decisively now, I think that would be a key turning point. If that happens, then we could potentially see the index rise to 20,000, and above that we have the 200-day moving average coming in at 20,350 or thereabouts. So those are the next immediate targets in the event of a bullish reversal here. However, with the trend line broken, there is a possibility we could see a continuation of the selling this week, not least because of fresh tariffs that could be announced anytime from Trump. If that were to happen and if we break these lows, then in that case, we could potentially see a continuation towards the 78.6% Fibonacci retracement level. But that's my alternative scenario. My base case scenario is that we will potentially see a bounce of some sort around these levels, which is underway at the moment. But what I'm looking for is a move back above this trend line to trigger a risk-on rally. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.